various other locations. Just so you know ahead of time, I just started recording this webinar. And I bring this up to date. I'm not sure if you guys attended last time, but we're trying to do this to provide data and access to what we have, to give you a little more insight than just straight numbers, and to have some of that feedback with you guys if you want to have that feedback. I will say that you're welcome to ask questions anytime as well. I never wanted this to be a very big audience, and so your interaction is welcomed during this presentation. I want to start off by first kind of going over some headlines, some things going on in the economy. On this slide, you'll see the blue line, which is showed by the left axis, shows the total employment at the U.S. level. And if you saw the recent employment numbers, it came out as 162,000 in July. Most people thought that was kind of a disappointing number. What was behind that? Construction dropped, but even as we just mentioned earlier in this conversation, that there's been a lot of rain not only here but across the U.S. that kind of dampened construction employment. And we also see the professional services and business services had weaker growth. And that's what has been growing over the last couple of years in the U.S. and even our regional economy. But there's some point, that I think I maybe shared in the last quarter, I just didn't really believe that professional services could keep growing at that level. Now, the BLS numbers have had major revisions over the last couple of years after they post them, and so you kind of have to think about what's accurate about their numbers. I've been following an HR estimate of employment, and they actually showed employment in July right at 200,000 jobs. So, and they seem to be a little bit closer to the final employment BLS has been having. So, if you take that into account, the jobs number were actually a lot better than, or at a better rate. It's keeping up with the natural growth and maybe a little more to kind of grow this economy. Now on the slide, I think this is interesting. The titles, that one of the headlines was "Employment is not supporting wages." I think that's a little misleading. You see this employment growth around that 2%, and you see the wage and personal income, and sure enough, it's not keeping up with that same trajectory, the same trend right there, and it's lower. But it depends on who you're looking at. For the business, this is actually a fairly good news, right? You're stuck with sticky wages, and during this last expansion period, you gave a lot of wages. Employees were stuck or are still attached to you. They have great skills, but since we had very little inflation didn't really take the pressure off of wages. So what's happening is you're just not seeing a lot of growth in wages as we go forward, because the balance sheet of the company was heavy on wages and now compressing. I think this is really shows that the smaller and medium-sized businesses are able to correct their labor costs, and I think later this year and beginning of next year you'll see more investments on the smaller business side, because they're able to finally get rid of the biggest cost component to them. I will say that just this morning there's also a headline, I didn't get it on here because I just read it. Dunkelberg, who is from the National Federation of Independent Business, released his index for small businesses or independent businesses, and he's going to be our speaker at the conference. Funny guy, and the news there was actually increased confidence from independent businesses. It's improved, so that's a good optimism in the market. U.S. mortgage delinquency actually decreased 22 basis points from the first quarter and has continued to improve. I like to bring that up because the housing market, as I did last quarter, has been something that has really slowed our economy, but even the shadow of the mortgage delinquency continues to have positive news at the national level. And however, I should point out what's holding back some of the housing, especially in the medium and low end, is still the credit's tight, and as you saw in the previous slide, income's not keeping up enough to really help get relief on the lower end of the housing market at the national level. All right, U.S. real GDP, we saw that second quarter is 1.7%. That beat most people's expectations. Most economists thought it'd be closer to that 1.5 or to 1.3. So we're seeing better growth than expected, especially when you look at what's happening in the federal government. The federal government did a lot of cuts that we called sequestration. Most economists thought that would slow the economy, but what happened, what grew in the second quarter, is investments from larger firms, and you saw consumer spending. Consumers are spending a little beyond their income. They're taking out savings, building up, using credit again, but GDP started growing. This time I have Moody's forecast. They're not really that optimistic. They're kind of one of the lower end for GDP for 2013, 1.7 for overall 2013, and they have more growth than that for next year, around 3.3%. Their consumer spending is kind of modest to high, that 2.1% for this year and 3.5% next year, and I think just like most other people are thinking that consumption is coming from savings and credit, not really from increased income. Residential investment really comes back to construction. A lot of this is high end, and if you look at residential investment so far this year, it's been close to that 20%, and if you annualize it, so there's some expectations are still pretty high on the high end for residential investment. For inflation, the consumer price index, there's no real expectation of a lot of inflation this year, 1.5% and 1.9%. That's driven because of what the Federal Reserve has done, said that they're going to start increasing rates as soon as the economy starts improving. So there's and slowing down some of the gas they're putting on the economy. So I think that's within line with what people expected. Here's our current components. We have 4 components, fairly simple, that explain the economy: employment, unemployment, manufacturing hours, and manufacturing earnings. And then we have our leading index, which has aircraft production, the Kansas leading index that we got from the Federal Reserve Bank of Philadelphia. National production, what's going on in the overall national economy and a global perspective from the international index. So what have we seen since the May when we did this presentation? May, we saw a little bit of improvement, kind of top there, and since then I put it in an oval, and you see that both our current and leading index have dropped. Some people are probably not that surprised with what's happening in Wichita, of why it dropped, and I will explain a few of those in the next couple slides. All right, here is our current conditions index. And what you see is when we annualize this, the Wichita economy has been extremely flat. When you take this last month, it decreased by a very small amount, 0.2%, not really that significant. Overall, our current economy hasn't shown really much. When you take it on the whole, not a lot of improvement, not a lot of loss. When you see within sectors, there's been a little bit of up and down, but at the gross, what's going on, it's pretty flat. The biggest factor to this is the total non-farm employment. Total non-farm employment decreased annually, decreased from the previous month. Unlike the national numbers, which I thought were a little underestimated, I'm not so sure this is wrong. I think this might be right when you look at what's happened with some of our layoffs, with still what's going on in aerospace. That might be actually a correct reflection of what's going on. Unemployment, although it shows as red, it's actually an improvement in unemployment by 0.2%. I looked at the labor force numbers, say, okay, are people re-entering the labor market? What's going on there? And it's pretty flat. Although unemployment's coming down, there's not a lot of real engagement in the labor market, not an expansion of our market. So nothing's happened in the last few months. It should start increasing. People re-entering, this discouraged workers should start coming back in that labor market over the next couple of months. The next two I'm going to show in some graphs, but you'll see hours of production workers did have a decline of 1.8%. It's kind of volatile, and I'll show you that. I'm not too concerned there. And I'll show you the earnings of production workers. So here's hours worked. This is production workers over the last few years. And what you'll notice is since 2010, although it's volatile, we've had an upward trend, right? And this is a very good sign. When you look at the, not aerospace and manufacturing in their context, the business side, but on the employment side, they're increasing hours, and that's a good sign that they're matching that labor, they're matching with the product. If you look over time, for this time period, 43.6 was the average. So we're now over the average number of hours worked in manufacturing. You'll notice during the last peak we got up way up to in the 50 range. I would expect that we will get to around 46 hours worked before the aerospace will start making those new hires. I think this is a sign that here we're getting skilled labor and we're matching that labor and we're being very careful, but that means it's not going to be until next year really before we can convert those hours into a new employment. Here is manufacturing average weekly earnings, and I want to draw your attention first to the blue line. And you'll see in the U.S., you'll see the average earnings have been continually increasing even during the recession. This is very different than the first slide that I showed where earnings wasn't keeping up with employment. There's a couple explanations for this. The first one is that the value of the U.S. dollar has kind of changed, and the U.S. global competitiveness. I think those are the two biggest factors of why you're seeing the average weekly earnings in manufacturing increase at the U.S. level. Versus Wichita, we had a structural issue, right? We came into an aerospace which has changed the structure of the labor market here. Now, I think this is actually a good news here on this one. I think I've got a line. Yeah, so we started declining. I think this is a sign of our manufacturing companies really realigning, getting their cost structure down, kind of similar to the national story. And you'll see that the wages have started to increase. I think they are matching. They're trying to find that skilled labor. They're having a hard time finding it, but wages are coming up to get the right production worker as we move forward. And I really see this as a good sign and a good health of the labor market component for manufacturing. So overall, the Wichita economy has been flat over the recent months. Manufacturing, I still think, is right there, especially on the employment side. They're trying to find skilled labor to go forward. And as for the labor market, you know, we're going to see more people re-enter the labor market over the next couple of months. All right, let me move to the leading conditions. What's going on in the next 6 to 8 months? And you know, as I mentioned before, when we revised this, it really has predicted 6 to 8 months ahead of time. Unfortunately, when we look at this, from month to month, there very little change, only 0.2%. When you annualize this, it actually has decreased some. So the question is, what is causing our next 6 months to kind of be downgraded? Last time I did this presentation, it was all about the Kansas Leading Index. And I ended up being right. I said there's a couple things in there that I didn't think were going to be of much concern. One was supply chain. The supply chain survey came out, and the subsequent months have done a lot better, and the Kansas Leading Index improved. The other one was bonds. We're talking about Treasury bonds. And with all the stuff that's been used for the Federal Reserve, I wasn't really concerned that the T-bill was being affected, and you'll see the Kansas Leading Index, those components have improved. I'll skip this aircraft production because I'm going to show that in more detail. That's the one that's really drawing us down. The national economy, there is really good news. Despite what's happened with the sequestration, you saw unemployment numbers, GDP, that continues to improve in the national economy. Not by a lot, but it's improving. Internationally, we see a very small improvement, but there's been some good news. Let me break some of those out for you. First, you're talking about China. China's economy is slowing. The GDP is still growing, but it's slowing is growing at a slower rate. And the last 2 months, I looked up some news. They've really done some good measures from my perspective to fix their economy. There's some good news behind it. They're going to continue to have a slowing growth of their economy, and that's not necessarily a bad thing. When you look at Euro, they had a consumer confidence their consumer confidence has improved, their business confidence has improved. Since we've had all this debt crisis there, this is some positive news on the Eurozone, thinking that more investments will come in the next few months. When you look at Latin America, which is definitely connected to our overall economy, their growth in GDP has improved over the last 2 quarters. So we're seeing not a lot of growth, but we're seeing some positive news even nationally. That's going to do really well for aerospace in the long term. So let me flip over here. This is a graph that you can create yourself on our website, and I want to remind you, all the data that we have you can actually download now from our website, and you can get and play with your own graphs, get the sources of what's going on. But aircraft production was the biggest factor, and it's weighted fairly heavily in our index of why our leading index dropped. And you'll see, you put this in context, it has dropped recently, but you see an overall trend going up. Now, when you look at what's going on in aircraft production, GAMA is the best source for that, and you look at their airplane shipments and billings they just released last week. It was really strong, great news behind that. Shipments for general aviation increased by 8.9%. Billings, which is a good sign for the vitality of the companies, increased 26%. The problem with that is when you look at general aviation, pistons increased, single turbo, multi-turbos all increased. The one segment that declined, and the only segment that declined, was the business jets, which declined 4.1%. I believe the Business Journal had an article about what's happening with Cessna and Learjet. They put some numbers out there showing what's going on. The other factor in our local economy, as you've seen in the news, is Spirit. Second quarter profits, were bad. They had some announced layoffs. We still have the news also from their profits from last year, which is they're kind of dealing with. I'm not too concerned about it, but it has definitely released some of the air out of the balloon in the Wichita economy. All right, so this comes back to the overall index. Again, both our current and leading have dropped. And I think when you look at employment, I don't think this is going to be a revision up. I think the leading index will increase over the next couple of months. So I'm not too concerned about that one, which means if it goes up the next couple of months, we're going to see more of the 2014 production to come back than we'll see anything this year. I will say overall for the economy, I really am bullish. I think we've seen a lot of really solid news going on in the national economy. We see all those concerns that we had last year really or most of them are wiped away. And we've kind of overcome most of those concerns. So I think the national economy is going to grow. I think the Eurozone's a lot better. I think things are going to start reinforcing each other globally and nationally, which is what we're waiting for in our regional economy to happen. And it's finally there. So overall, what do I say? I think aircraft production should continue to improve. The business jets market will see much better in the second half or next year. The international outlook, again, much better. I think it's spill over to us. And again, I don't think there's a lot of hurdles that we have to overcome for the economy to grow. And that's a different kind of outlook, a different kind of perspective than we've had the last few years. So again, our index is now at index.cdbr.org. You can download all the data easily and quickly and see graphs. I will entertain any questions that you guys have.
Jeremy, do we know who the people are who dropped out of the labor force who might come back? Do we know what level of labor they might be?
Yes, we do, actually. We were able to get some data from the Department of Labor, and we've been following unemployment insurance claims. And so we can see that by what industry they were from, what education, and by race. And I think we might have it by gender too. And you can see the production worker African American, lower education is the component that was most affected here. And I haven't seen it. I think we're going to we should have another unemployment insurance update on our eConnection within the next month or so. I think we're about ready to release another one. But yeah, it's the same story as the national economy, though.
So what your data seems to be showing is that while jobs are coming back, wages aren't coming back at the same pace. And as these people re-enter the market, they're going to create a larger disparity between those two?
So,
that is our...
Yeah, I see what you're saying. I think this story again is a little different because here we have a structural problem. There's a big conversation going on. Is this a cyclical problem? Like the economy just went in recession and we hired them back. Right. 2001 was a perfect example. Even here, we hired them all right back. But I think what we see in this slide is that wages are going up nationally. It's a cyclical issue and a shift in global function going on in manufacturing. People want to be in the United States for manufacturing. But for Wichita, it's a structural issue. And it's about the right skills to the right job. So to your question, I think we have a mismatch of our labor here. I think they have to get a different skill. They have to go to a technical college. They have to go to a new industry. We're not going to need everyone in that same sector. So there's going to be a frictional problem within our labor trying to reattach to the market. And could that keep wages down? It could keep wages. Go ahead.
For some time to come then, until that happens, if that happens, doesn't this chart suggest that we're going to fall farther behind the national averages?
I think in manufacturing, we're going to keep getting higher skilled wages. So here in manufacturing, wages should continue to grow because we're going to get higher skilled instead of the moderate skilled in the manufacturing wage. So that could go up here, but overall wages in Wichita could have a pressure down because someone is going from a production worker with this experience to a new market, and they have all of a sudden their amount of experience is not of value to the market, and that could put the overall wage down. So I agree in the overall wage, not so sure about manufacturing because in manufacturing we're still trying to find that really high skilled worker that can add value, and that wage will go up.
Jeremy, do you see any indication of what those jobs are that are going to become available for the retraining opportunities?
Well, that's a good question. We haven't done a forecast on occupation. However, I will say I just hired someone new in our office who's finishing up his PhD and has got a labor and econometric background. So this is a question that we want to look into more detail. However, when you look at where the jobs have been growing, it's been growing in the professional business service sector in this Wichita area at a higher rate than even the national level. We're providing this middle management and professional service all across the state. So for Western Kansas are using our services here. So those are where the jobs are creating. Definitely a big mismatch for what we're doing. I believe, I felt really strongly that there's a lot of opportunity for other manufacturing in the Wichita area. When you look at our skill sets, it is perfect for manufacturing to come back in this direction, and I believe that's going to happen. It's just how fast can we get those companies here and those job opportunities here to get our labor attached in the right segment.
Jeremy, do you see do you have any sense of the mobility of this workforce? In other words, how long are they going to wait before if it's increasing in the rest of the United States, they'll start moving? And so what's our window of opportunity here for retraining before we just lose them permanently? Any sense of that?
Yes, and I've looked at out-migration, in-migration from the previous recessions, and even so far this one, we have people moving out right now. The people that are highly mobile are those with more than a college degree, and unfortunately, that's not the right scenario that we'd want for our overall economy to lose the highly educated people. But that's exactly what's happening. They're moving for new opportunities, and when we look at that migration data, they're moving to large urban areas, East Coast, West Coast. The production worker tends to stay. And I remember, well, it's been, I think, a year when Spirit left. Yeah, it was last summer. There was a couple articles that, and I think that depicts what's going on in that labor market. Our engineers went to Oklahoma pretty darn fast, but production workers, when they did some stories, were just going to stay here. And that's why we have a lot of discouraged workers. We have people sitting waiting for those jobs. So some of them are going to move because they have to. Some of them are going to stay because this is where their family, their connections are socially. And that means there's a social cost to Kansas and to this area to when they're sitting there not getting employed, having these costs being incurred, services being rendered from them. All right, these some good questions. Any others? All right. Well, I appreciate you guys joining in and spending your time with us. Again, I'm recorded this. I'm going to post this to our website and some other places just so that it's easily accessible to more people. We will do this again. We're going to do it quarterly until we kind of get the kinks come out. We're only giving this to Way Out right now just because we want to make sure we've kind of got the right kind of product, make sure we're delivering it the right way, and would welcome any suggestions that you have. We wanted to keep this quick and just down to what really is going on in our economy, our local economy. Some more insights to it. So thank you.
Great, Jeremy. Thank you.
All right. Have a good day.
Very useful.